Welcome back to Factful Finance, where smart money moves me straight talk. Okay, pop quiz. What's the one financial product you have to have, but hope you never use? Yup. Insurance. Car insurance, health insurance, homeowners, life. We shell out thousands of dollars a year and we tell ourselves it's worth it for peace of mind. But what if I told you that peace of mind is coming at a much higher price than you think? Not just in dollars, but in missed opportunities, hidden fees, and outdated coverage that could be silently draining your bank account. Let's unpack the real reason your insurance might be costing you more than you bargained for. First, let's get something straight. Insurance is not a scam. It's a pillar of sound financial planning. Risk Management 101. But the way most people buy insurance, that's where the problem starts. Because most of us are underinformed, overinsured, and stuck paying for policies that don't actually protect what matters most. Let's start with Olivia. She's 35, works in tech, and makes decent money. She's got car insurance, life insurance from her job, and a homeowner's policy on her townhouse. Sounds solid, right? Except Olivia's been paying way too much for full collision coverage on her 12-year-old car that's barely worth $3,000. Her deductible? $500. Her annual premium? Over $1,600. Run those numbers and it's painfully obvious. If she gets into a fender bender, she'd barely break even after paying the deductible and dealing with depreciation. But Olivia didn't realize that. She just kept renewing the same policy year after year. Sound familiar? Here's the truth. Insurance companies bank on the fact that most people won't review their policies. They quietly raise rates, add coverage riders you don't need, and count on auto renewal to keep the cash flowing. According to the National Association of Insurance Commissioners, nearly 70% of Americans haven't shopped for new auto or home insurance in the past 3 years. And in that time, premiums have risen up to 25% in some states, without any change in coverage quality. That brings us to the first way insurance costs more than you think. Loyalty is expensive. In fact, many insurers use a practice called price optimization. It's a euphemism for charging loyal customers more simply because they're less likely to switch. Yes, you heard that right. Your reward for sticking around? Higher premiums. Now, let's talk about overinsurance. Noah, 42, is a single dad with a paid-off home and 2 kids. He's got a $2 million life insurance policy. Sounds responsible, right? But here's the catch. He bought that policy 12 years ago when his mortgage was huge and the kids were toddlers. Now, the kids are in high school, college savings is mostly covered, and his investment portfolio has grown. That massive policy? It's overkill, and it's costing him over $400 a month. Here's the principle. Your insurance should evolve as your life does. CFP professionals recommend reviewing your life insurance needs every 2 to 3 years, or after major life events. Marriage, divorce, births, job changes, paid off debts. Why keep paying for protection you don't even need anymore? Third reason, bundling traps. You've heard it, bundle and save. Sounds good, until you realize you're locked into a package that overcharges on one policy to discount the other. Insurance companies know that bundling makes it harder for you to price shop individual components. You get a discount on home insurance but quietly pay 20% more for car insurance and don't even know it. Next up, hidden fees and sneaky exclusions. Let's say Ava has a comprehensive homeowner's policy. One day, her basement floods from a heavy rainstorm. She files a claim. Denied. Why? Because flood damage from natural disasters isn't included in most standard homeowners' policies. It's a separate rider, one she didn't know she needed. Or Henry, he bought travel insurance for his big anniversary trip to Italy. Got sick, canceled the trip. His claim? Rejected. Turns out pre-existing medical conditions weren't covered under that plan. $4,200. Gone. Here's the hard truth. Most people don't actually know what their insurance excludes. And by the time they find out, it's too late. Always, and I mean always, read the exclusions. And if that sounds boring, think about how boring paying out of pocket for a $20,000 roof replacement would be. Let's flip the coin. How do you fix this? Step 1. Audit every policy annually. Print it. Read it. Ask yourself, what am I protecting? What's the worst case scenario? Could I self-insure part of this risk? Self-insuring means having enough emergency savings to cover losses instead of paying for unnecessary low-risk coverage. For example, if you've got $15,000 in an emergency fund, do you really need that $250 deductible on your car insurance? A $1,000 deductible could lower your premium by 20% or more. Step 2. Comparison shop every 1 to 2 years. Use independent brokers or tools like Policy Genius, The Zebra, or Gabi. But don't just chase the lowest price. Compare coverage quality, claim service ratings, and financial strength of the insurer. Look for A-rated carriers from AM Best. Step 3. Match coverage to current life stage. Kids out of the house? You probably don't need a huge term policy. Retired and no longer driving daily? Drop collision coverage if your car's not worth much. Renting instead of owning? You may need renter's insurance, but not homeowners. Step 4. Unbundle strategically. Run the math. If bundling saves you $150 annually but costs you $400 more in premiums on one policy, it's not a deal, it's a trap. And don't forget the 5th and final tip. Use insurance as a financial shield, not a crutch. Insurance is there to protect against catastrophic loss, not every little hiccup. Filing small claims, like a broken windshield or minor home damage, can lead to rate hikes and flag you as a high-risk customer. If you can pay out of pocket, consider doing so. Let me leave you with this. Insurance should feel like a safety net, not a money pit. If you haven't reviewed your policies lately, you might be throwing away thousands, literally thousands, for coverage that's outdated, overpriced, or flat out unnecessary. Which brings us to the one thing they don't advertise. The best insurance isn't the most expensive, it's the most efficient. Got a money question eating at you? Drop it in the comments. I read every single one. And hey, if this helped you see your insurance differently, you might want to double-check those other set it and forget it parts of your finances too. This content is for educational purposes only and not financial advice. Mentioning any services or platforms isn't an endorsement. Always consult a certified financial professional for personalized guidance. Think you've been overpaying without even realizing it? You're not alone, and you don't have to stay stuck. Want more hidden money leaks exposed? You'll want to see what I've got next. Click the video on screen. It's a game changer.